Good morning, everybody. You're welcome once again to Global Financial Inclusion Week 2021. You're welcome to the session titled Inclusive Finance Reaching the Last Mile Through Stakeholders Collaboration, streamed from Nigeria, organized by Financial Inclusion Nigeria. My name is Ajetumobi Olumayowa. I'm a director of programs and events at Financial Inclusion Nigeria. It's nice to be here to welcome you once again. Without further delay, we're going straight to the beginning of this program, and I'll be handing over to Ibukun Omololu, she's going to be the moderator for this program. Ibukun, please, over to you.
Good morning, everyone. It gives me such great pleasure to be here with you today. And I would first of all like to thank the organizers of this program for considering me for this event and to appreciate you for the wonderful event as well. Today, we have a fantastic panel of dynamic speakers who will be sharing with us from their wealth of experience as stakeholders of financial inclusion. And I am super excited to introduce them immediately. So, without further ado, let's get right into it. Our first speaker today, this is a panel discussion, and we're going to have about six speakers who are going to be sharing their experiences with us. First of all, would be Mrs. Professor, I beg your pardon, Professor Olayinka David West, who's the Associate Dean, Lagos Business School. Olayinka David West is a professor of information system with almost 3 decade experience in the IT and financial service industry and a passionate advocate for digital transformation and inclusive finance. Her research and practice engagements involve policy and strategic management interventions towards digitally transformed businesses and society. She has expert certification in financial inclusion policy and digital money. She is also a governing council member of the Fintech Association of Nigeria and a member of the African Women in Finance and Payments. She is a certified information systems auditor, CISA, and certified in the governance of enterprise IT, CGEIT, and the academic advocate to the Information Systems Audit and Control Association. She is also a qualified practitioner of the skills framework for the information age. She mentors young women in STEM and was featured on the Tech Women of Lagos exhibition, along with leading women in Nigeria's financial technology industry. Professor David West holds a doctorate in business administration from Manchester Business School and an MSc in business system analysis and design from City University London. You are welcome, Professor. Next is Ashley Immanuel. Ashley Immanuel is Chief Executive Officer of EFINA. Ashley Immanuel is currently the CEO of EFINA, overseeing EFINA's work to drive inclusion finance in Nigeria. Ashley supervises EFINA's market systems development approach, including research, advocacy, capacity building, and driving innovation through EFINA's Innovation Fund. Prior to joining EFINA in 2013, Ashley worked for IBM Global Business Services as a consultant for US federal government clients. In this role, Ashley carried out consulting work for the United States Agency for International Development for several years. You're welcome, Ashley. Ashley holds a bachelor degree in sociology from Duke University.
Thank you. Good to be here. Good morning.
Next is Seun Ayegbusi, who is the co-founder and chief executive officer of InsurPass Technologies. Seun is currently the co-founder and chief executive officer of Insure Technologies, an API-based insurance technology company providing insurance infrastructure as a service solution, allowing companies across all sectors to embed insurance products and back-end components into any application. Seun, through his company, is on a mission to democratize access to affordable and informative insurance products for the base of the pyramid consumers in Nigeria. Seun has published several articles which have been consulted by thousands of readers within the insurance, finance, and technology space. Aside from this, he is currently part of two digital insurance advocacy groups in Nigeria, which engage the insurance industry and its regulators on the need for a total adoption of insurtech to deepen insurance penetration in Nigeria. Thank you for joining us, Shiv.
Good morning, everyone. Great to be here.
Next is Mr. Tunji Andrews, who is the co-founder of AWABAH. Tunji Andrews is the co-founder of AWABAH, a digital platform providing pension access to the self-employed. He's a financial literacy advocate and a macroeconomics thought leader. He is a member of the team that set up the sector strategy for statistics used in aligning data across all ministries and developmental agencies in Nigeria. You're welcome, Mr. Tunji Andrews. Next is Mr. Taiwo Joda. Mr. Taiwo Joda is the managing director of Axion Microfinance Bank and has over 25 years experience with both banks and non-bank financial institutions. He has 2 degrees in banking and finance from the University of Lagos and is also an alumni of Sahid Business School, Oxford University. Mr. Adeshina Joda is a senior member of the Chartered Institute of Bankers of Nigeria. He serves on various committees, including Dean of Fidelity Bank, Business School, Business School member, Asset and Liability Committee, and Management and Credit Committee, and Chairman Bank Disciplinary Committee. You are welcome, Mr. Jordan.
Good morning, and thank you very much. Happy to be here.
Thank you. Last but not the least is Mr. Paul Oluikpe. Mr. Paul Oluikpe is, please just give me a moment. Mr. Paul Oluikpe is a Deputy Director and Associate Head of the Financial Inclusion Delivery Unit, FIDU, at the Development Finance Department of the Central Bank of Nigeria. He previously worked in the Strategy Department, Management Department, and then the Trade and Exchange Department of the bank as Head of Policy Formulation and Implementation before moving to the Secretariat. He holds a distinction in Strategy and Innovation from the Said Business School, Oxford University, a PhD in Engineering, and an MSc from the School of Business and Economics, Loughborough University, UK. His role at FIDU involves leading change management, coordinating the stakeholder space in Nigeria, driving the implementation of financial inclusion strategy, monitoring performance, and communicating outcomes. Paul has worked as an academic with Abia State Polytechnic, Loughborough University, and the University of Nottingham. He was honored in 2015 with the Emerald Citation for Excellence Awards for his seminal research paper, Developing a Corporate Knowledge Management Strategy, and also recognized by the British Council in 2017 for contributions to professional development during the Education UK Alumni Awards. You're welcome to the panel discussion, Mr. Oluikpe.
Thank you very much. Good to be here.
Great. So, as we all know, stakeholder collaboration is a process which groups with similar or different perspectives can exchange viewpoints and share solutions that go beyond their own vision or what is possible. And this is really important for forging mutually beneficial connections with third party and individuals that have stakes in common interest. So my first question would go to you, Professor Yinka David West. You have done extensive work in terms of research, training, and engagement in the ecosystem, and I have been able to, use some of your work while I was in banking as well. In your opinion, what are the realities of collaboration that exist between stakeholders in the financial inclusion space?
Okay, thank you, and good morning, everybody. It's nice to be here, and I think for me, it's actually nice to be on this side of the panel. Normally, I'm on the other side. You're either moderating or facilitating. Well, so customers' perspective, and everything I want to say has to be thought out about from the customer's perspective. Collaboration is really about working together, and we know that from the financial inclusion or digital financial services value chain, you really can't do everything alone. It's either you have the telecoms layer that's done by a telecom provider, or the deposit layer that's done by a bank, a deposit money bank, if you don't have that license. So whether we like it or not, there's some engagement and interactions in distribution, product delivery. So we need to think about it from the customer's perspective. And I think it's not so much about what we desire, it's really about what does the customer need to do. And we're talking about distribution at the last mile. So how do we ensure that the customers get access and can use financial services at the last mile, and then build the partnerships that we need to get to that last mile effectively? Now, this also means that it's a bit more difficult because there's no cookie cutter approach to dealing with one region over the other based on other externalities like digital infrastructure or financial infrastructure that's going to support the distribution of those financial services. So we almost need to curate our partnerships by design. We need to understand what each locality is about and how we can deliver and be effective in that locality, because it's not about what we want to do, it's about how is it going to be received and delivered. So it's about understanding the cities and the dynamics of these cities that we live in. So when you think about Lagos is not a representation of Nigeria because things work in Lagos. There's communications in Lagos. But when you want to deliver in a city in Abia State or in some of the creeks areas in the South region, the dynamics are totally different. So who do we need to partner with to ensure that we can get there? So when we're thinking about partnerships, we need to think about certain dynamics. We need to think about the types of partnerships we need to get into depending on the product or service we're trying to deliver, the distribution channels we're going to use. We're going to think about also the infrastructure that's available or not available in the location, and then the dynamics and the nuances of the location and the city that we want to go into. So those are some of the considerations that we need to have. And I'm going to stop there so I can give my other colleagues a lot more to say. Thank you, Buku.
Thank you so much, Professor Yinka David West. And I loved the fact that you spoke about collaboration in terms of um, all the players in the macro, in the meso, and in the micro spaces, and actually looking at the dynamics of what the customers need from the perspective of the customer. Fantastic. So my next question would go to Shil, based on what Professor said. So stakeholders involved in financial inclusion programs are usually drawn from various focus areas, just like the professor has said, and is mostly based on the country's financial inclusion objectives. There are a number of benefits that flow from having this good coordination structure and all. So, Mr. Shaw, Ayegbusi, how do we leverage technology to build more stakeholders collaboration?
Thank you very much. It's practically saying by the technology called APIs. Okay, APIs are just the basic answers to this. APIs allow two softwares or two applications to communicate to each other. Having identified the kind of companies we could go into partnership or forge partnership with to build financial inclusion in Nigeria. One thing that is certain is that a lot of these other companies, or what we call third-party companies or third-party applications, already have their own infrastructure. Should we talk about telcos? Should we talk about the bank? Should we talk about fintech startups? Should we talk about health tech startups? A lot of these companies already have, their own basic infrastructure. So what we can do is to expose insurance services or basically financial services through APIs, okay, that allows these companies to embed or integrate APIs or insurance services through APIs into their own application or into their own infrastructure. Basically, we're talking about layering financial services, or should I say from the space where I play in insurance services now, onto existing infrastructures for either banking. Basically, we have this thing called bank assurance that has been in existence for a while, but it has been done manually. That's the collaboration or partnership between banks and insurance companies that allows insurance companies to actually sell their products within bank premises. But doing this through API technology or doing this within the digital space allows integration or embedding of insurance products directly on bank applications, and we can imagine other use cases that we can actually forge through API technologies, or the concept we also call insurance as a service. Let me just quickly talk about that before we move on. So insurance as a service as itself allows for insurance companies, or should I say all insurance companies, to expose their services and products to third-party applications or third-party companies. In this case, the partners or the partnership we want to foster to drive or promote financial inclusion. Okay, so basically that is just we can leverage APIs, build models that allows insurance services to be, to be embedded in third-party applications. Mobile money players can come into play with this whole API technology, or open insurance API, as we call it at Insureprice. Okay, agents of banking platforms, agents are definitely, embedded in all these nooks and crannies within areas, or remote areas, and we can definitely get financial services or insurance services to those people who do not even have access to technology through existing infrastructures that play in such remote areas. Okay, so let me pause here while we move on to the next person. Ayebukun.
I think Ibuku is having network challenges.
Oh, can you hear me?
There she is.
I apologize for that. We all know the network situation. I was confused for a moment. Okay, thank you, Shil. Unfortunately, I missed the later part of what we were talking about, but I was able to pick some points around partnership, especially with banks and financial industries, which I think are integral parts to making microfinance and financial inclusion work in Nigeria. So my next question will go to you, Mr. Taiwo Joda. One of the most significant and successful intervention in the financial inclusion space of Nigeria has been microfinance, which has ensured access to appropriate financial products and services, particularly to the vulnerable and low-income groups, at an affordable cost. So, Mr. Taiwo, it is evident that microfinance has its reach deepened in the ecosystem, and with the likes of what Axion is doing and Lapo and quite a number of microfinance banks, we've seen a lot of changes in that terrain. What are the strategies other stakeholders can build to incorporate products and services through microfinance banks and institutions?
Thank you very much, Ibuku. And yes, I'll agree with you that microfinance has a very deep reach in the ecosystem. Today we have about 875 microfinance banks trying to serve a varied and varied number of customers, women, people living with disabilities, the youths. I strongly feel that in order to be able to incorporate products and services from stakeholders, it is important to first understand what are the challenges. I think it is in profiling solutions to these challenges that the collaboration that Professor Yinka David West mentioned, and the incorporation of products and services can be focused on, because the product and the service must first come to solve a problem. I must focus on the customer need to be able to do that. So let me first look at what do we expect the microfinance banks to do, or what does the regulators expect them to do? In five broad categories, they expect to open accounts for people who are unbanked. They expect to grant loans to both the unbanked and the underbanked, those who are excluded financially. They're expected to facilitate payments. They're expected to take deposits, help them to save their money, and they're expected to drive microinsurance to that last mile. And in recent past, there's been a lot of challenge. There's been a lot of drawbacks in implementing this role by the microfinance banks. and the area of collaboration, the areas of strategies to be built by stakeholders to be able to drive this in those challenges. And let me just mention a few of the challenges. So there's the issue of the competition or competition that has come with fintechs, from the fintechs and some microfinance bank, quite a number of them, wouldn't have strong technology infrastructure and strong technology base, are finding it difficult, even in areas of partnership, in areas of collaboration. They're trying to struggle to know even where to start from because they don't have those basic infrastructures. I hear Ayegbusi talk about APIs. To some of them working in rural areas, API is alien to them. What is API? How do I start with this? So there is that issue with digitalization. There is the issue even in partnering. Now, we're not talking about competition, even in putting themselves in the right pedestal to partner, to be able to partner with fintechs. They have issues. We have issues with a lot of bad loans, especially occasioned by the financial disruption we encountered last year. There's issue with cybercrime. There's issue with having a very weak institution that is vulnerable to capital, the capital base is vulnerable to loss, and these things need to be put together. There is issue with funding and ability to grow organically, and also closing the gaps on even the what I call the inclusion diversity. So you begin to wonder today how many people living with disabilities have been financially included and even economically included. How many of our women are we working with? So how many of the youths are we working with? And also, because of lack of infrastructure, you'll see a lot of microfinance banks operate in the urban area and the peri-urban area and running away from the rural area where the services are mostly needed. And so the opportunity to incorporate products and services with working with in collaboration with microfinance bank is looking at these issues and saying these are the solutions we can prefer to these things. So if you talk about insurtech, insurance technology, and microfinance bank are expected to provide micro insurance. Now you see there's an handshake there. That is a product or a solution that is focused on a product. And what do we need to do? Grow scale, drive efficiency, and look at customers' convenience. I would like to pause there and then while we take the discussion further. Thank you.
Thank you so much, Mr. Taiwo Joda. And it's just remarkable what the micro insurance banks are doing in Nigeria, and I just wanted to mention that. So my next question will go to you, Ashley Immanuel. Given the different levels of participation that EFINA has done in the macro, meso, and micro levels within the Nigerian population, because you've been involved in advocacy, you've been involved in donor funding, partnered with Bill and Melinda Gates Foundation. EFINA has done a great job in building the frontiers for stakeholders' engagement in Nigeria through its activities. Can you please share with us the challenges and successes so far?
Sure. Thanks very much. So it's definitely been a long journey. EFINA started operating in 2008. And at the time, financial inclusion wasn't really on the map in Nigeria the way it is now. So EFINA, some of the first work of EFINA was to just get financial inclusion to be a topic of discussion and something that's taken seriously by regulators, by financial service providers, and so forth. And also to start providing some of the evidence behind that, because before EFINA started doing the nationally representative access to financial services in Nigeria survey, nobody actually knew how many people in Nigeria were financially included. And for those who weren't in the system at all and didn't have any digital footprint, there was really nothing known about them. There wasn't really data around what are they doing, are they saving, are they borrowing, et cetera. So I would say some of the successes have really been getting to those first stages. EFINA has kind of partnered with regulators, with providers to get out a national financial inclusion strategy to help stand up some really important institutional structures, such as the Financial Inclusion Delivery Unit, which is domiciled within the CBN, which Dr. Paul is leading now. And some of the industry convening structures that the Financial Inclusion Delivery Unit is driving. Also, as I mentioned, just to bring some more evidence into the conversation and help stakeholders take a more evidence-based approach to driving financial inclusion. So when we look at, although there's still a lot of work remaining to be done, when we look at where we started, more than a decade ago, I think that as an industry, we can really record some successes in terms of now, if you talk to any financial regulator, we've talked to not just microfinance banks who have obviously kind of always been in the business of financial inclusion, but other banks, even a lot of fintechs, financial inclusion is something that they're thinking about. I think that in terms of, there's still a lot more to be done. So I liked how Taiwo Joda talked about inclusion diversity, right? And Dr. David West talked about some of the challenges around that really reaching the last mile. So in some ways, we've done a great job continuing to drive financial inclusion. Now more than half of Nigerian adults use some kind of regulated financial service, like a bank account, a microfinance bank account, et cetera. But that still means we've got about half of the adult population to go. And some of the remaining half are going to be the most difficult to reach population. So the people living in rural areas, the people who don't maybe have steady income, who are earning daily or weekly in cash and so forth. So now I think we need to think about, as the other panelists have mentioned, how do we really, understand and address those remaining challenges? How do we partner strategically? And how do we also maintain our focus on some of those most excluded groups, such as women, such as rural, et cetera?
Thank you, Ashley. Thank you so much. Thank you for the insights. I think you touched on an area that's like a soft spot for me, inclusion of women. And my next question would go to you, Mr. Tunji Andrews. Now, research shows that in Nigeria and the world at large, there's a greater number of the population who do not take deliberate actions towards financially securing their future, especially in old age, particularly women. And according to the NBS Retirement Savings Account, the RSA report of 2016, most of the registered pension account holders are employees in the formal sectors. And even the number is pretty low when you think about the number of workers in Nigeria. So, Mr. Tunji Andrews, pension to the informal sector is new to the ecosystem. Can you share your experience in the market and what you think other stakeholders can do to build the drive for pension to the informal sector in Nigeria?
Good morning. Thank you for having me. This is a big question. It's one that we've been dealing with for a little while in the space. It is true that the penetration level is low. We're talking about 0.11% of the Nigerian labor force who are in the micro pension space in Nigeria, as compared to about 6% in Ghana. So it's really early days. And then if you want to look at the fact that more than half of our labor force in Nigeria today, this is including people who are unemployed, more than half of our labor force are in the informal space, you know that Nigeria is looking to a very bleak future if we do not start to aggressively try to get people saving towards their retirement. So coming back to the conversation of what can be done, it starts from understanding the people and meeting them where they are. The general context is nature itself abhors a vacuum. So there is an alternative to retirement planning. With I mean, it's an African-wide context. So you find that the average African thinks about having 6, 7, 8, 9 children, hoping that one of them will do well enough to take care of them in retirement. That is the natural way Africans think towards retirement. It's not a very efficient method, but it is the alternative. So when you come into the system, you have to come with the understanding of where they are, and you have to come with the understanding how they see retirement and what it is that you can be able to bring as a like and type to what it is that you think they want to buy into. So, for instance, in the way the regulator in Nigeria has created the pension system, the micro pension system, is in like and type of the Isusu, which they are very comfortable with, which they know about. So, one of the things we've done strategically is to be able to get the community signing up the community. So we engage freelance agents who are from local communities, who then act as a go-between to be able to get people in the community to be able to sign up. The general thought about it is that we underestimate the power of many communities. Communities still live the way African communities generally live. So if there's somebody in the community who knows something about one particular thing, people will defer to the person's knowledge base. So what we try to do is to give one person in, or at least a group of people in local communities, as much understanding about what we are trying to do. Because think about it, what you're telling them to do is to give you their money, right? And they're going to forget about it for the next 25 years. I mean, you have to really be very good to convince them to do this. So we have to understand it, because, you know, there is a small arrogance that comes with financial service providers towards people who are financially excluded or underbanked, from the perspective of feeling, oh, we are giving you the solution to life. They already have solutions. You are just probably given better and more efficient solutions. So you have to come with a bit of humility and understanding that they are not uncomfortable where they are. They understand where they are. They know where they are. They are used to where they are. So if you're going to give them something that is better, you have to give it from the perspective and the understanding of where they are. So for other financial service players that are probably looking in this space, especially micro insurance players too, I think one of the things you have to start with is a broad understanding of who you're talking to, a broad understanding of the people that you're dealing with. I know that the micro finance players totally understand this. They do it in such a fantastic way. But the thing about it is that, you know, all financial service players really need to look at inclusion from the perspective of how they look at it. They go into the markets. We go into the markets. They go into the artisan communities. We go into the artisan communities. They meet them where they eat, sleep, drink. We do that also. So we have to also look at it from that perspective. Before we can give them technology, they all have smartphones, but they don't use them for financial services. But before you can get them, you have to explain it to them first of all. So I think that is where we have to look at it from. And for other players, honestly, it's a long journey. It's a hard, long journey. You have to be ready for the long haul. It's not going to turn around in a year. It's not going to turn around in 2 years. Look at Efina. I've been exposed to the work of Efina for over a decade now. And I mean, it's now been really, I mean, Ashley was talking about the fact that when the conversation started, financial inclusion wasn't something that was, you know, popular in Nigeria. Now it is. So we have to look at it from that long-term approach. And it will definitely pay dividends in the future. Thank you.
Thank you so much. That was super insightful. And it's staggering the number of people who have mobile phones and do not really use it for financial services. It's really amazing. So my next question will go to you, Paul, Dr. Paul Oluikpe. You have done phenomenal work in the financial inclusion space over the last few years. And in coordinating the financial stakeholders of the FIDU, please walk us through some of the challenges you have encountered working with stakeholders.
Thank you very much, Ibuku. Our stakeholders are our development partners, financial services providers, regulators and ministries, departments, and agencies, and then grassroots organizations as well. So just to clarify who our stakeholders are everyone or anyone who is interested in, advancing financial inclusion and materially expanding access to finance to a generality or majority of our citizenry in Nigeria. So our stakeholders include the beneficiaries themselves. So what are the top challenges? The top challenges are two: alignment and synergy, and then alignment of priorities, because with multiple stakeholders, you will have priorities that are pulling in different directions. With financial services providers, obviously the economics and the fundamentals of competitiveness and maximizing profit for shareholders is there, and as a result, it is often not very fashionable for financial services providers to set up in places where you would not have volume and value, in material levels. So that often is militating against our imperative to drive access to finances to people who are at the very low end of the ladder in Nigeria, obviously. And so some other challenges are the resources. Financial inclusion is resource intensive. Resource intensive in the sense that for some needles to move in Nigeria, you require to subsidize or provide the incentive to drive access to finance. For example, in hard to reach areas, in remote areas like the Northeast, Northwest, where exclusion is ticking up to, hovering around 70%, 60%, 50%, the very, very acute levels, according to the EFINA survey released recently. I mean, you would require some level of radical or transformative, activity, and that would often come in the form of incentives like subsidies to try and change the narrative, because the financial services providers would not, in their very nature, be able to set up in those areas unless there are incentives. We do have agents as well, in coordinating this space. We find out that agent attrition, agent dropout rates are very high. They are not sustainable in a whole lot of places. And so those are the challenges that we face. And like I have mentioned, funding is a key problem. Funding financial inclusion initiatives, given the nature of the constraints that we are facing. And so we need to incentivize people to move into those places. Another thing also is, coordinating a multiple and complex environment like Nigeria. Some terrains, some geographical terrains are far removed from civilization, far removed from infrastructure, and there are so many issues that we are facing trying to reach those areas. And these are actually our primary beneficiaries. And so you could also notice that in some places also infrastructure for mobile network connectivity is so bad. So in my own village, for example, multiple networks do not work. Only Airtel works in my village. So, and I use MTN primarily. So, I mean, and then access, locating financial services providers or an agent point or an access point in my village is a problem. Okay, so that coordination, and that would point to the issue of coordination on the ground, that sometimes we are really not coordinating so very well. We've done very good in some things, in quite a number of areas, raising awareness, creating that, ubiquitous awareness around financial inclusion in Nigeria. But then in terms of coordination on the ground, we're having issues, carrying a whole lot of multiple actors who have very complex, priorities, multiple priorities that are different from each other. And as a result, implementation sometimes could be very disparate, very fragmented, and you will not be able to, and as a result, you could notice that implementation is not oftentimes very coordinated and synergized, and that's the problem we're having, in terms of coordinating this space. But I do believe that everyone has good intentions to try, and drive access to finance. We need to do more with our governance. We need to do more in holding people accountable. We need to do more in trying to drive, implementation from a very, very much tight and coordinated, perspective. Those are the challenges that we are witnessing. But overall, great job that everyone is doing to drive access to finance. Thank you.
Thank you, Dr. Paul. And those are great insights, especially when you spoke about implementation and governance. So, a follow up question to that would be, with the impact of COVID-19 on the economy and the populace, it is evident that there are more interventions needed to meet with the demands of the marketplace for the retail mass. How can CBN engage stakeholders more so the space and the impact already is not latent?
Okay, thanks a lot. Yes, the COVID has depressed outcomes for financial inclusion significantly. As you know, we are at 64.1%. We were targeting 80% at the end of 2020. That objective was far-fetched as at the end of 2020. It didn't materialize. And so we could narrate as to, or maybe prognosticate as to how we couldn't reach it, or the issues that we are facing. But the key thing is we did not achieve it. We did not hit the mark. COVID caused it a little bit, and there are other factors that reinforced it. But then, how can we change the narrative? How can we reach people at the very, very consumer levels? We are doing quite a number of things. I'm sure you know about the COVID fund. You know about the entrepreneurship fund for youth, and also the MSME, the micro, small and medium enterprises fund from the CBN level that we are driving. But then I want to point out that the monetary sector that the CBN regulates is really a very small fraction of the entire economy. The fiscal sector is very huge. And so there are quite a number of other actors in the space that needs to up their game to try. And because CBN can only scratch the surface, because the financial sector is not the majority of the economy. The fiscal sector is multiple times bigger than the financial sector. And so if the needle is not moving in that space, what CBN is doing would seem to be a drop in the ocean. Okay? And so we need to do more. But then from our perspective, from the little we are doing here, we are trying to stimulate entrepreneurship in this space. We are trying to drive, access to credit for MSMEs. For example, the 100 by 100 that we just brought out to try and bring, entrepreneurs who are productive and who are doing productive, and try to give them access to machinery, help them with foreign exchange to bring in goods that are primary goods that they could use to produce. We're also helping the youth because we have a youth fund that we're trying to, help the youth stimulate entrepreneurship and development and their innovative capabilities. We're also doing what we call the Sci-Fi Creative Industries Financial Initiative, which is targeted at the services sector like Nollywood, where you mostly find youth, aspiring youth, and also people who are in technology space, mostly youth, and who are also running fintech small firms. So we are really spreading our tentacle, but I can tell you that as much as we are laboring and stressing ourselves to try and help, it would appear as if it is a drop in the ocean if we don't have complementary actions from the other spaces. It's very, very, very important because that's a very huge swath of the economy, the fiscal space. Thank you.
Okay, I have, thank you so much, Dr. Paul Oluikpe. I have a question from the audience. And the question is, what are the drivers of agent attraction and what kind of incentive is compelling to access areas fraught with high levels of insecurity, as this is now a major problem where there are high levels of exclusion?
Is that a question for me, obviously?
Yes, sir.
Okay. The drivers of agent attrition, number one, is the value proposition, the business case for agents to site in a place. If the numbers are not stacking up, because if the economics are not justifying the setup, then agents would drop out. An agent that is having very low customership in a place has no incentive to remain there. They need to move because you're in business to make profit. And then how dispersed our communities are, especially in the northwest and northeast, although there's a very large, up to 70% of adult Nigerians live in the rural areas. Okay, and those rural areas are very dispersed. And then insecurity in the northeast and northwest also contribute to agent attrition because they get robbed, they get hounded, they get chased around, and they drop out, they leave the place. So high low volumes, insecurity, the very dispersed nature of our localities is contributing to that. So it will require a lot of incentives to try and ameliorate.
Thank you. I think Professor Olanyika David West also had some things to say regarding.
Yes. I'll just chime in and emphasize what Dr. Paul said. And I think we need to be mindful that economics always makes sense. An agent is also a small business in his own right? And what in some work we did in terms of looking at cash in, cash out economics, we realized that some of the largest share of the agent cost is actually power. And so when an agent has to run a generator to power the business, then it actually takes a strain on the business. The next issue we talk about is the issue about liquidity management, which means that, when he runs out of cash, how does he go back to the bank to rebalance? And do we have rebalance locations within the vicinity? And if the agent, and then another thing is that we realize that agents also need to have some other complementary business that's bringing income so we can attain to the low volumes or anything like that. But then again, we still need to put these agents in locations. And like Dr. Paul said, it's really about how do we manage the economics and their strategy around how do we digitize payments, really, because bottom line is that we have to drive volume. Volume won't come overnight. So how do we digitize a lot of these payments? So when Dr. Paul is talking about all these funds, it's also ensuring that we have a digital delivery chain to ensure that somebody in Nasarawa State or wherever they are can actually get access to the funding from a CBN or something or the other without having to break it in cash. And we're hoping, Dr. Paul, right, that the e-Naira will help us alleviate some of these challenges in terms of having a store of value, but we can deliver to everybody independently. Thank you.
Thank you so much, Professor Ayinka. I think Mr. Taiwo Joda also wants to make some contribution.
Yes, thank you very much. And I think Dr. Oluikpe spoke very well. I think one of the major challenges to agent attrition is also the restrictive scope of what they have to do. And likely that is just cash in, cash out. Driving incentive also includes how can we enlarge the scope? How can they play a critical role in working with microfinance banks and other financial institutions to acquire customers? How can we use them more effectively to drive KYC? And when we begin to expand the scope of what they do, then there's a lot more that comes in form of incentive. But when the scope is so narrow, and then customers have alternatives to payment, for example, so I don't have to walk up to you, I can use my USSD. Then the footfall, the volume is going to continue to dwindle as we drive HNL adoption. And so it is also critical to see how do we expand their scope. Thank you very much.
Fantastic insight, sir. Thank you so much. So we're almost out of time, and I'm going to pose the last question to everyone and would kindly appeal that you address the question in 1 minute. And it's really around the ecosystem. What changes do we expect to see in the ecosystem going forward? And I would not be biased. I would say ladies first. I think Ashley could go first and then Dr. Olayinka. But the question basically is, what changes do we expect to see in the ecosystem going forward?
That's an interesting question. I think in terms of expect, I think it's pretty much guaranteed that the pace of technology change will continue to accelerate, right? And I think we've seen some promising kind of bright spots in the Nigerian market around fintech. So innovative solutions have come up, including some of our panelists here who are here today who are trying to innovate and use technology to do so. I think that we see potential in that in the market around fintech and using innovation. So I think that we can definitely expect that. As other panelists have mentioned, if I can change the question slightly to what changes I hope to see, I would say one is, as other panelists have mentioned, really kind of effective collaboration models around and kind of collective embracing of technology. So on the part of the regulators, really balancing risk management with the need to open the space for innovation, establish financial service providers like the banks, partnering with new providers and so forth. So that's one change I would hope to see. And then, as we've discussed, the other change that I would, or the other ecosystem component I would hope to see going forward is that we sort of make good on the intent that I've heard from a lot of stakeholders lately, which is around driving more equality and true inclusion. So one aspect we've talked about today is gender inclusion. There's been a longstanding gap in terms of men's versus women's financial inclusion in Nigeria that's really not reduced for the most part since we started measuring in 2008. If we want to close that in the coming decade, we need to work collectively. The CBN has now issued a framework for advancing women's financial inclusion, and I think that the ecosystem can work together to prioritize implementation, and hopefully, when we measure again, we'll start to see a lot more progress on some of those measures of equality.
Thank you, Ashley.
Okay,
Professor
thank you.
Ayegbusi.
Let me go next. So I think that the ecosystem, diverse actors come into the ecosystem, and then technology products and services will also expand and increase the fray in what we're going to do. But I'm going to sort of step us back and say, let's forget all that hype and let's go back to the essence of the matter. And this is what Tunji spoke about, which is really about how do we begin to get away from the hype, because the hype will not necessarily move the needle exponentially. How do we go back to basic principles of empathy? How do we ensure that we understand and know our customers and understand customer demographics, customer behaviors, and the psychometric aspects of our customers to ensure that we can really, really solve their problems and meet them at their point of need? I don't think technology is the answer to everything. And we've heard that we need basically what we call phygital strategies, a mixture of physical and digital to address the last mile. So let's go back to the drawing board and realize that it's about building around the customer, not pushing out to the customer. And really, it might not give us the scale that we want, because right now, every fintech wants to be a unicorn in 5 years, right? That might not be the magic bullet that we need to address financial inclusion. So we need to understand the different trade-offs that we need to make and come to terms with the reality. Are we solving a social problem, or are we solving an economic problem? And I think we can do both, but it's really about how we balance our needs and how we build our businesses and our sustainable business models around these factors. Thank you.
Fantastic insights, ma'am. Okay, Tunji, would you like to go next?
I probably would just be echoing what was just said. It's absolutely. I think the biggest word is empathy for me. I think there's not enough empathy in the space of financial inclusion. We need a lot more as concerns understanding the customer. It's very critical if we're going to push the needle. And the second thing is collaboration. There is I see it whenever we are going out, and then there is a collaboration between us, Stanbic IBTC Pensions, and Linkage Assurance, and you would almost not know that we are three different entities when we're on the field, but it's always a collaboration, because we know that, my customer is also likely to be your customer, and your customer is likely to be my customer, but we do not have the numbers to be able to populate when we're going out, so we go out together. So I think we all really need to see that there is a long-term goal, if the 35 million people who are actively working today get onboarded into one form of financial services or the other, and their KYC is digitized, it benefits the entire ecosystem. It benefits the central bank, it benefits the insurance players, it benefits the pension players, it benefits the microfinance players. So collaboration for me is a critical part, but empathy also. I hope to see those going forward. Thank you very much.
Okay, to round it up because we're really running out of time, Seun, what would you like to contribute to that?
Okay, thank you very much. Just to echo what everybody has said as well, collaboration and balance between regulation, tech as an enabler, product development and customer needs. We just need to find a balance between all this and see where we go from there. Okay, thank you.
Fantastic. I think we can take Dr. Paul Oluikpe's comment just before I round off.
Thank you very much. Just very briefly, I think there is more that we regulators can do to try and unfreeze the space and allow for more players to come on board to serve the niche market, to serve the needs of various segments, because what we are lacking is product diversity, product suitability of every segment of our population to try and expand uptake. Thank you.
Fantastic. Thank you. Thank you so much, sir. And the key words for me today have been collaboration, interwoven collaboration, understanding the customer, empathy, building around the customer. This has been such an insightful conversation, and we hope that the conversation would go forward. The most important thing is that no matter what it is, results can only be achieved through stakeholders working together harmoniously with the same purpose in mind. Thank you to all our distinguished panelists for joining us. Thank you so much for the wealth of experience and for sharing generously with us. And thank you to the organizers of the show. We would like to round it up here. Thank you so much.
Thank you so much, everybody. It's nice having everybody. I guess it's been very, very engaging. If we have enough time, I guess we'll still talk more. Dr. Oluikpe, you took your time out of your busy schedule. Everybody, Mr. Taiwo Joda, I know you've actually given Professor Ashley, everybody. Thank you. The discussion continues. This discussion does not end here. Let us go out there, continue to work more, and let's see again Financial Inclusion Week 2022. Thank you very much. It's nice having you. God bless you. You have a beautiful day out there.
Thank you.